And one thing I wanted to bring up is like you brought up these historical price action charts of Bitcoin. How important is that in a lot of your trading strategies and how you like to look at the markets?
It's really number one. And the reason it's number one and why charts are so important is because a chart represents human emotion, right? So people are either bullish, they don't want to miss out, they're chasing stocks, or they're extra bearish, or they could be just neutral, right? And the charts and the price action is determined or is basically shown by that. Now, the key is to understand that human emotion never changes, right? So there's always going to be greed, there's always going to be fear. And that's why the historic charts can be so helpful to us to tell us where the next move is coming. Because again, you might have different, like a lot of people are saying, well, it's different. And I'll tell you one thing. So my prediction on Bitcoin of going down to 18 to 20 before making a big move up to 100, then 500, the way you, and again, everything I do is probability. So there's always a chance of failure. What you watch for is if this market can take out that 65,000 high, then it takes away any comparisons to the previous cycle. So for me as a trader, I have to look at both the bull case and the bear case, and that's your trigger, right? So if you go out and take that up, that never happened in 2013, that never happened in 2017, it would change everything. And then you could absolutely say, okay, we're going straight to 100K and then maybe beyond like that.
I've seen you use the term scene of the crime before. Can you explain a little bit about what that means?
Yeah, absolutely. So it's just kind of a coined term that we use here in trading, but I'll show my chart again on that Bitcoin chart so we can kind of gather it. But basically, you have a trend line, and it could be a trend line at any point, right? But the key is that the scene of the crime breakdown occurred when price went below that line. So here's your trend line, that head and shoulders, again, shoulder, head and shoulder, the neckline here. So this was the trigger of the collapse down to 30,000. I mean, it happened within 3 days. Basically, we went from 50,000 down to 30,000, and there was a reason for that drop, and that was the fact that the trend line broke. So technically, the algorithms that the funds are trading with, technically sentiment is going to shift at that point, and it caused this exodus. So this trend line was the breakdown point here. When price goes back to it, we refer to that same line as the scene of the crime. It was the scene of the crime right here where that collapse occurred. And therefore, that's a retrace to the scene of the crime right here as well. And again, you can see, I mean, it's really amazing how charts work, how just off of that chart, I mean, that drop was almost instantaneous from where it kissed that level.
Gareth, I see that you guys also have some option products that you offer to the clients. So do you think that the retail investor should be trading options? And if yes, what is the most recommended strategy that you often use?
Yeah, so that's a great question. It's something I run into in our business quite a bit. Is people, you often see people with the least amount of money wanting to do options because you can get a lot. Essentially, you're getting extra leverage and you get a bigger bang for the buck. To be honest, I always steer people away from that have small amounts of money, because options can expire worthless. Like, you could be long a stock and be down in a stock, and you could technically hold it for 10 years, and eventually you'll make money on it, right? Assuming the company doesn't go out of business. With options, they will expire at a certain point, and you will lose 100% if you did not make the call in that amount of time correct. So in general, it's people that have small accounts generally want to make a lot of money very quickly. I can speak from personal experience. I was one of those people when I started, folks, and I lost my money so many times. Like I literally was trading when I first started trading on my own. I had $10,000, right? That was it. And I went to a fund that gave me 50,000. And anytime I took a loss, it was out of that 10,000. So if I lost $1,000, I was down to 9,000. And I kept on screwing up because I was trying to hit a home run every single time, just like you do in options, like you want to make 100% or something like that. And I had to just work my butt off to replenish that account. And it was a struggle. Finally, I started to say, all right, I want to hit singles and doubles. Like I want to take it slow and steady. Slow and steady wins the race. That term is very, very important. And it's true for trading. Don't be so concerned about doubling your account. I always recommend this. Use a calculator and punch in, let's say you start with $10,000 and then punch in a return of like 20% a year and just keep on doing 20%, and it compounds, and you'll be amazed in how quickly that 10,000 turns into 100, into 500, and even $1 million versus what I did, which was trying to hit home runs, which a lot of people do with options. And end up losing it 3 or 4 times and have to work my butt off to replenish it. So options are a great area to have fun with, but I use my fund money for options. So I usually take about 10% of my portfolio and I say, all right, I'm going to protect myself here with this option. I like this, gold right now. So I'm going to buy some gold calls, et cetera, stuff like that.
And so what's your take on the $1 billion plus futures liquidations on cryptos? And will that continue to be buyers' worst nightmare forever?
Yeah, so I liked what I think Marcel said earlier about how there's, you're having these buyers, but then you're also having sellers. To me, it's kind of a market that, as long as, if you can see, so if you have big sellers and the market's absorbing it, that's actually very good to see. It shows you that there's a lot of demand there. What you don't like to see is where a seller comes out and price just collapses because no one's willing to buy it. So I think that for the most part, it's an okay thing. You want to see, for me, the best case scenario is that a lot of the whales get out of some of their positions so that it's a more distributed Bitcoin system where there's more people owning it. That'll make it more secure and safe. And eventually, I think it becomes more mainstream because of that. What I don't like to see is, you don't want to see 10 people in the world owning 90% of all the Bitcoins. I mean, that just creates so much risk for an investor like me, where one of them could decide to sell and I lose 20% in a split second on my investment.
And how do you feel about like the regulatory front on cryptocurrencies? What's going on in China and the US, and the possibility of a Bitcoin ETF possibly coming in the future, and what that might do to the price?
Yeah. So first of all, I think China's banning, there's a couple things. Number one, I think it was the best thing for Bitcoin and the United States, right? So when China banned Bitcoin, and they've done multiple segments of banning, they banned, this and holding it and all this type of stuff. But basically you saw a lot of the mining operations shifted to Texas. All right. Now you might say, well, what's the big deal about that? Well, on a political side, that's amazingly good for Bitcoin, because now you have politicians that know that there's a huge amount of jobs reliant, especially in Texas, a very big state, on mining. And it's going to make it harder for the government to really enact any sort of negative regulatory action against Bitcoin or cryptocurrency. So that's actually a positive. Now, the reason why Bitcoin was banned in China is because China has the digital yuan. And China wants that to be the premier digital currency. Now, for me, I would never go near the digital yuan because it's still controlled by the government. As far as I'm concerned, it's just a digital fiat currency. They can still print as much as they want. I would much rather be in something that can't be printed by a government and controlled by a government. But that's really why they're doing this. They want the digital yuan to eventually replace the dollar as the reserve currency, which again will create a major issue and be another positive for Bitcoin. Now, your other question was in terms of an ETF and regulation. So for me, regulation in Bitcoin is very important. All right. If you're like me and you see 500K on Bitcoin in the future, whether it's 5 years out or whatnot, the only way I can figure out how to get there is by the US creating regulation that makes funds like pension funds that have trillions of dollars say, okay, we need to now diversify and put 5% of our assets in cryptocurrency, in Bitcoin, in Ether. Same thing with other funds, other companies out there. We've seen some adoption like MicroStrategy, Michael Saylor, being all for it. But you're not, unless you get some more regulatory action on it, you're not going to become really, you're not going to allow these companies and these individuals to really feel comfortable about getting in on them. Having said that, I do think a Bitcoin ETF comes, maybe even announced by year end, but I do think the Bitcoin ETF will kind of help it go more mainstream, but you need that regulation. And again, the key here is you want regulation that's smart. You want transparency. You want certain things that if you're someone that believes in Bitcoin is going to be a long-term positive. In fact, it could be a negative short-term because people get panicky about regulation, but I would use that as a buying opportunity at the right levels.
So Gareth, you said that if we break the 65,000 all-time high this year, which I think is going to happen because of a potential ETF approval next month, what is your year-end target? How easy is it to break 100,000 if the ETF gets approved?
Wow. So if the 65,000 level gets taken out, then I think you have a pretty straight shot to 100. And I would say, again, it's so hard to figure out the timing on it, but if let's say that 65K gets broken in October at some point, like some people are projecting, then I think you have November and December to get to that 100K. And I do think that is a possibility. So yeah, I think 100,000 would be a reasonable year-end target if that 65,000 is broken. But again, keep in mind, as long as that 65K isn't broken, then the cycle matches the 2013 and 17 cycles in the short term.